Welcome everyone to Vested Interest. This is Shane and Happy New Year. Welcome to 2025. In this video, we are going to cover the 4 stocks I am looking to focus on in January 2025. That's right, New Year here. Hopefully everyone had a great New Year's. Maybe you're recovering today with a bit of a hangover from the festivities last night. Hopefully everyone made it home safe. In this video, we are going to focus on the 4 stocks I am buying in January. You can see them here: Oxy, Lam Research, Owens Corning, Union Pacific, all existing positions in the video. But before we get too far into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos. And a special thank you to those who subscribe to the channel. I really do appreciate it. On this channel, we focus on dividend growth investing. Really, it's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, dollar cost averaging, in my case, on a weekly basis into the portfolio, buying stocks in growing companies with positive cash flow that covers the dividend, and companies with a high return on their invested capital. I do utilize both a dollar cost average approach, but I also do larger purchases whenever I get my bonus, usually in the end of March, around April time, beginning of April, somewhere in there. If I was to win the lotto, obviously I'd probably dump a big bucket in as well, or if I do a side job. Now, it is free to see what I'm doing on this channel, but if you would like to help me out, if you could take a moment to do me a big favor, hit that thumbs up button down below if you're a dividend growth investor and you find any value in the content. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that subscribe button down below. Hit the notification bell so you're notified whenever we put out any new content, along with this series every month where I run into, in this case, a new year, a new month. I'm covering what I'm looking to focus on for that month. Now, these won't be the only stocks that I focus on, but this will be the high focus, the primary focus for the month. Now, obviously, if these run up or if other stocks pull back and present opportunities, I'll switch up a little bit. But for the most part, these will be the ones that I focus on. So that's what we're going to cover. And there is the thanks button down below for those of you who are able to buy me a cup of tea down there. Go ahead and click that, and you'll see several tiers you can donate to the channel. Any funds that I do get from YouTube, which I haven't made any money off YouTube yet, but hopefully someday, will go right back into my portfolio. Actually, I'm going to split it up between my portfolio and my 2 daughters' custodial accounts. That is what we'll be doing with the funds, and I will cover that in the future if that ever does happen. Right now, still haven't seen any revenue from that. Maybe I should cover that sometime, what the YouTube algorithms look at and what how do you monetize a channel, that sort of thing. Maybe we'll do that in a video sometime. But for this one, we're going to cover the 4 stocks I am looking to buy in January. So let's get back to that. First up on the list is Occidental Petroleum, ticker OXY. This is out of the energy sector. This is also the newest addition to the portfolio. I started adding this mid-December-ish. So I've been adding for the last couple weeks. I'm going to continue that trend into 2024 here. We started adding this in the $47 range, as you can see, whenever the market closed on Tuesday. We are in Wednesday, New Year's Day. But when the market closed on Tuesday, $49.41. So it's a little bit above my cost basis. We'll see that here in a little bit. Looks like the after hours is actually up a little bit more, but there on the 31st, you can see $49.41. Now the market cap of this one is $46.36 billion. Revenue $27.14 billion. The net income from that revenue is $3.71 billion. Shares outstanding, I'm not as concerned with this, and it doesn't tell you much unless you go in and you look at whether or not they are adding shares or they're pulling shares out of the market. Right now, Oxy is pulling shares out of the market. They do have a buyback program going right now. Their EPS, earnings per share over the trailing 12 months, that's what that TTM stands for, trailing 12 months, 3.84, $3.84 per share. Price to earnings ratio is currently at $12.86 per share. They are expecting that to rise. Their forward PE is a little higher at $15.85 per share. Dividend is 88 cents. They are a quarterly payer, so divide by 4 to get that quarterly payout with a low starting dividend yield. Not super low, but it is higher than the overall market, but it is lower than my average dividend yield at 1.78%. Mine's in the 4% range. Ex-dividend date was December 10th. I bought after this ex-dividend date, so I am not going to get this dividend payout on January 15th, but those of you who maybe held the position or were adding to it before this December 10th date, December 9th or before, you will get that dividend on January 15th. 52-week range as low as $45.17, as high as $71.19. So they still are pretty close to their 52-week low. Again, I was buying this, or started buying this in mid-December, around $47 per share, $47.50, I think it was, right in there. So it has bounced back a little bit, but not even close to its 52-week high yet. A beta of 1.6, so it is more volatile than the overall market, one being the market. So I've been trying to use this volatility to my advantage. This is a Warren Buffett position as well. He recently added a bunch more to this position. I think when it dropped down into that $45 range, $46 range. Now he started buying this in the mid 60s. So his cost basis is well above where it currently sits. And I was not buying it in the mid 60s, but down here in the mid 50s or in the 40s, I see more value in it there and was looking at adding something to the energy sector anyway. So that's why I went ahead and pulled the trigger. Analysts call this a consensus hold, which they're kind of, I don't understand why they're calling it a hold when they see potential of 23.58% upside on this one. So kind of contradicting themselves a little bit. They say hold, but they also say there's a potential of 23.58% upside with a price target of $61.06 per share. Earnings date is coming up February 12th. So if you're interested in what their earnings call is, go ahead and tune back in, not to this channel, but to Occidental themselves on February 12th, and you can see that earnings report or hear that earnings report if you want to listen to their earnings call. Jumping over here, I like to look at dividend yield theory. To do that, we look at their 5-year dividend yield average of 3.85%. We compare it to their current 1.82%, or over, it's a little off, 1.78%. This was from Yahoo Finance. This was from stockanalysis.com. This was from Yahoo Finance. So they are a little off, 1.82%, but that is why I recommend more than one source for information, but pretty close, 1.82% or 1.78%. Either way, it is significantly lower than their 5-year average, which speaks to overvaluation actually, but actually also recently cut their dividend with more of a focus on paying down debt and repurchasing shares. So there is a plan around this dividend cut. So I would take this one with a grain of salt because of that dividend cut. Now their payout ratio is very low, 23.01%, which is under the 75% that I look for there. Return on equity and return on invested capital are extremely low right now, 2.8%. Return on equity and return on invested capital at 4.9% are well under the 10% that I look for. But again, they've recently done some cost-cutting measures, buying back shares, increasing the dividend significantly even after that dividend cut, with a focus on paying down debt. So I like their long-term plan. I think they're executing it well, which is part of the reason I was interested in buying them in the, like I said, mid 50s or under is where I'm at with this one. So if it shoots back up to the 60s, I won't be adding. But right now, so long as it stays under the mid 50s and lower, I want to build this position out. EPS growth is listed at 10%. I like 5% or better over the next 5 years. They did not have revenue growth listed. Jumping down to free cash flow, I want growing free cash flow over time because typically if a company has growing free cash flow, they have growing dividends to match. 2021 here, you can see 7.6 billion in free cash flow. 2022 up to 12.4 billion. 2023 big drop down to 6 billion, trailing 12 months at 4.5. So you can see it's a cyclical company. Energy stocks usually are. This is out of the oil and gas sector, so they are going to be impacted by oil and gas prices. Repurchase of capital shares, like I said, they are aggressively rebuying shares, especially in 2022 and 2023. But 2021 here, you can see 8 million repurchased. 2022, 3 billion shares repurchased. 2023, 3.4 billion shares purchased. Trailing 12 months, which is basically all of 2024 at this point, 196 million. So very aggressive in 2022, 2023. They are supposed to be continuing this trend, a little bit of a downturn in 2024, but I project that they will continue something close to 2022 and 2023 going forward. At least that is what they've reported out. Here is my position. I do have 36 shares. There's that dividend. That's what that D stands for. Dividend is going to pay out. This is from my brokerage account. I am up slightly at 2.6%. You can see here my cost basis is at $48.16 per share with the most recent purchase. I just added 20 shares here this past week. So that brought me up into the $48 range from the $47 range, currently at $49.41. So I'm going to continue nibbling on this one until I get to 100 shares, maybe a little bit more. 100 to 120 shares is where I'd like to be ideally with this position. And while it's under the mid 50s and lower, that's where I'm going to focus. Next up on the list is Lam Research, ticker LRCX. This is out of the information technology sector. I think of the 4 positions, this is the only one that is currently below my cost basis. Everything else is going to be bringing my cost basis up, but they closed out the trading day on December 31st there, Tuesday, $72.23. Or Tuesday, 72.23. Market cap of 92.94 billion, revenue of 15.59 billion. Net income from that revenue is 4.06 billion. Shares outstanding, same thing. I don't really focus on this, but I want them pulling shares out of the market. I believe Lam Research is. We'll see that here in a second. EPS, earnings per share, is sitting at $3.09 per share. Price to earnings ratio is a bit high, in my opinion, at $23.38 per share, but they see the forward PE a little lower at $19.97 per share. So I like that. Dividend is 86 cents paid out on the year. Divide by 4 because they are a quarterly payer. Even lower dividend yield on this one than what we saw with Occidental at 1.19. Ex-dividend date was December 11th. It is going to pay out on the 8th, and I will get that payout because I've owned Lam Research for several months now. I've been adding to this one for several months. 52-week range as low as $68.87, as high as $113. So another one that's pretty close to its 52-week low, though it is starting to recover a little bit. Actually, this one's been bouncing around for me between $71 and $78 per share. And I've been just adding to it every week pretty much. 2 shares here, 4 shares, 3 shares, 6 shares, something like that every week. A beta of 1.46, so another one that is more volatile than the overall market, one being the market, and I am trying to use that volatility to my advantage, buying it in the low 70s. You know, if it was a drop in the 60 range, you know, I'd buy it there and then kind of backing off a little bit whenever it hits that, you know, $78, $80 range, then I kind of back off. Analysts do call this one a buy, price target of $96.05 with a potential of 32.98% upside. Earnings date, January 22nd, so tune into Lam Research there on their webpage if you want to check out their earnings report. Jumping over, we're going to look at dividend yield theory on this one as well. We look at their 5-year dividend yield average of 1.14%. We compare it to their current 1.19, or over here where it says 1.28. Either way, a little bit higher than their 5-year average, which speaks to potential undervaluation. So because their dividend yield is currently over their 5-year average, that speaks to undervaluation. These are inversely correlated. So pretty close to fair value. Again, if this one was to drop down significantly, I would just continue to add. I don't mind buying good companies at fair value, which is pretty close to fair value, slightly undervalued according to dividend yield theory. Return on equity is at 49.12%, well over the 10% that I target. Return on invested capital, same thing, 21.5%, well over the 10% I'm looking for there. EPS growth forecasted at 14.52%, very high. I like 5% or better forecasted over the next 5 years. And revenue forecast is at 10.85% over the next 5 years. Very good numbers overall on this one. Again, that's why I want to continue to add to this position, even though I'm well over 100 shares right now, but I want to continue to add. Going down to free cash flow here, you can see 2022, $2.5 billion in free cash flow, up in 2023 to 4.6. Looks like a slight drop to 4.2 in 2024. Trailing 12 months up as well, 4.8 billion in free cash flow. So nice steady growth actually, because if you look at the repurchase of shares, 3.8 billion in 2022, down in 2023 to 2 billion. But here where it looks like there may have been a drop from 4.6 to 4.2 billion, they increased their repurchase of shares from 2 billion to 2.8. So that accounts for that drop there. And trailing 12 months, 2.9 billion. So consistently repurchasing shares. Looks like nice growing free cash flow overall. Good EPS, solid revenue growth. Very nice position overall. And again, I'm going to continue to build this one out, even though I am, if you look, here's my position, over 100 shares. Currently hold 134 shares. I am down 8.09%. My cost basis is $78.59. So again, this is one that is below my cost basis. Every time I buy it does bring that down slightly, which is what I'm looking for on this position right now. I do have a covered call on this one right now with a $75 strike price. Closes out Friday. So we'll see where this one sits, excuse my language, where this one sits at the end of the week. And hopefully it's not called away, and we'll just run that. Even if it is called away, we'll just run that cash secured put with the funds. But if it's not, we'll probably run a covered call on it next week as well. So this is one that I really like. Much like Oxy, this will be the focus with these next two kind of being supplemental for the month of January. Next up, number 3 on the list, Owens Corning, ticker OC. This is out of the industrial sector. Closed out the trading day there on Tuesday, $170.32. Looks like their market cap is 14.61 billion, revenue of 10.4 billion. They're keeping net income of 1 billion out of that 10. EPS $11.72 per share. Very high EPS on this one. Price to earnings ratio is $14.54 per share. Another one they see it coming down. Their forward PE is at $10.80 per share, so lower than their current. Dividend is $2.76 paid out on the year. Divide by 4 because they are a quarterly payer. Dividend yield of 1.62%. So all of these are pretty low yielders. I think Union Pacific, the next one, is the highest yield, but we'll see that here in a second. Ex-dividend date coming up January 6th. So this is one that if you were to buy them January 5th or before, so you've still got 2 trading days in this week, you could add, you will get the next dividend, which pays out on the 17th. 52-week range as low as $138.70, as high as $214.53. So they are floating between their 52-week high and their 52-week low. And I'll talk through why I'm adding to them right now, even though it seems like they're well above a 52-week low, not close to a 52-week low like the other 2 we just saw. But we're still adding. A beta of 1.43, so another one that's pretty volatile, more volatile than the overall market. I'm trying to use that volatility to my advantage, buying whenever it pulls back, holding whenever it shoots up. Analysts call this one a buy. They do have a price target of $200.83, would represent a 17.91% potential upside. Earnings date February 12th. So if you're interested in that, go ahead and tune into Owens Corning's earnings call on February 12th. Jumping over, looking at dividend yield theory again, 5-year dividend yield average of 1.41%. Current dividend of 1.62%, same number here. Since it is higher than their 5-year average, that speaks again to undervaluation, at least according to dividend yield theory. Another one with a very low payout ratio of 19.69%, well under the 75% or under that I look for there. Return on equity sitting at 19.13%, well over the 10% I'm looking for. Return on invested capital, same thing, 11.31% is over the 10% I'm looking for. Now, they did not list earnings per share growth, so I didn't like that. Nothing listed there for revenue either. Can't really speak to that. I'd have to do more of a deep dive into a couple other sources to see what's going on there. Jumping down to free cash flow, you can see here December 31st, 2021, they had $1 billion in free cash flow. 2022 up to $1.3 billion. 2023 looks like a bit of a drop down to 1.1. Trailing 12 months back up to that 1.3. They are repurchasing their own shares pretty consistently. $570 million in 2021. 2022 $795 million. 2023 $657 million, and trailing 12 months $626 million. I really like that. Now let's talk through this again. I own all of these companies that we're talking about, so I'm consistently adding to them whenever their pullbacks happen and trying to build out these positions. Currently have 60.24851 shares. I am up 53.36%, but if you've been watching the channel, you've seen this one up as high as 100%. So that's why I'm willing to add to it. Even though it is not right up against their 52-week low, I'm bringing up my cost basis from $111.06, right? So that's well below their current 52-week low. So that's why I'm willing to add to this, even though it is above my cost basis significantly. And I'm trying to get this one in the 160 range. That seems to be where this one pulls back right down into the, right, if you look here, 168, 169, 170 or lower is kind of where I'm interested in buying this one. If it was to shoot back up again, I'll probably back off and wait for more of a pullback. But right now, if it hits 170 or below, that's where I've kind of been adding to this one. I have added a few shares over the last couple weeks. Lamb Research, same thing. Union Pacific, same thing. I've added several shares to both of those positions over the last couple weeks. All right. And number 4, Union Pacific Corporation, ticker UNP, also out of the industrial sector. Closed out Tuesday's trading day there right before the New Year's at $228.04. Market cap of $138.25 billion. Revenue of $24.29 billion. They're keeping $6.64 billion out of that revenue and net income. EPS $10.88 per share. Price to earnings ratio currently at 20.96, but they also see the forward PE on this one a little lower at 19.48 going forward. Dividend is $5.36 per share. This one does have the highest dividend yield at 2.35%. Divide that dividend by 4 because they are a quarterly payer. Ex-dividend date was December 9th. So unless you held them or were buying them on the December 8th or before, you did not get the 12/30 payout. I just got that one here in my brokerage account on Monday. Was nice to see. 52-week range as low as $218.55, as high as $258.66. So not too far off its 52-week low. I think it's close to getting within 15%. So another reason I'm willing to buy, but also another one my cost basis we'll cover here in a minute is very low on this one. A beta of 1.05, so they are more volatile than the overall market. Again, trying to use that volatility to my advantage, buying whenever they have big pullbacks and holding whenever they run up. Analysts call this one a buy. Price target of $259.80. That would represent a new 52-week high, with a potential of 13.93% upside. Earnings date is January 23rd, so another one, the earnings date is coming out here towards the end of the month. If you're interested, go ahead and check out Union Pacific. I'm sure they'll have their earnings call on their homepage. Now let's look at dividend yield theory on this one. Compare their 5-year dividend yield average of 2.15% to their current 2.35 over here. That speaks, again, since it is higher than their 5-year average, to undervaluation, at least according to dividend yield theory. Low payout ratio, 48.16. I think this one actually is the highest payout ratio, just under 50%. Everything else was around the 30, 19%, 20% range for the previous 3. Either way, still under the 75% that I look for there. Return on equity, very high at 43.4%, well over the 10% I'm looking for there. Return on invested capital, same thing, 12.34%, over the 10% I'm looking for there. Earnings per share growth, and if you didn't notice, except for Owens Corning that didn't have it listed, all of them, their EPS growth is significantly higher than the 5% I'm looking for. Their Union Pacific at 10.47%, with revenue forecasted at 4.21%. Again, free cash flow, we want growing free cash flow over time, because typically if a company has growing free cash flow, they have growing dividends to match. They can pay down debt, make acquisitions, reinvest back into the company, increase dividends, all the things we want companies to be doing. Now, looking at 2021 here, December, $6 billion in free cash flow. Looks like December 2022, they were down to 5.7. 2023, down again to 4.7. Trailing 12 months back up to 5.5. So it actually looks like they had a couple of down years here, maybe recovering going into next year. Repurchase of capital shares, they are pulling shares out of the market. December 2021, $7.2 billion, very aggressive in 2021 and 2022. 2022 to $6.2 billion. 2023 and the trailing 12 months actually down a little bit, $705 million. Trailing 12 months, $831 million. So again, railroads are typically cyclical though, so it looks like a bit of a downturn. Maybe we're on an uptrend here. We'll see how that goes. But long-term, railroads, in my opinion, are a place to be. Doesn't necessarily have to be Union Pacific, but we are not going to stop shipping things over rail anytime soon. And it is very high barrier of entry to start a railroad. Like, there's not a whole lot of companies that are starting a new railroad out there, if any, that I know of. Most of it's just acquisitions of larger railroads buying out smaller lines and consolidation in these companies. Now, again, Union Pacific, I do own this one, have owned it for several years now. I have 46.81466 shares. I am up 12.84%, but again, look at my cost basis, $202.09. So it's under their 52-week low. So another one, even though it is above my cost basis, I'm willing to raise my cost basis right now while it has a bit of a pullback. I'd love it to continue to pull back, right? 218, get back here under 220, but right now I like this one under 230. So whenever it dips down under 230, I've been buying. I have added, I think, 4 shares over the last couple weeks, 2 shares here, 2 shares there. That's what we're thinking about for the next month as well, maybe 1 or 2 shares a week while it's under 230. And I'm going to mix and match these. Oxy will be the focus with probably like 14 to 20 shares a week. And then I'll supplement LRCX, Union Pacific, and Owens Corning on the times that they pull back kind of in that price range that I want to look to add. Union Pacific being under that 230 range. Well, those are the 4 stocks I am looking to add as we enter into 2025, January here. Again, Happy New Year. Hopefully everyone had a very fun, safe, Happy New Year last night. And maybe you're watching this video recovering a bit on New Year's Day. These are some other ones that I think are showing value right now that I may nibble on as well. Again, those are the 4 that I'm going to focus on. So you'll see some version of the 4 of them, 2, 3, if not all 4 every week, 1, 2, 3, 4 shares. Besides Oxy, I'm going to be, like I said, Oxy will be real aggressive, 10 to 14 shares a week as long as it's under the mid 50s. With supplemental with Owens Corning, maybe 1 or 2 shares here. Union Pacific, same thing, 1 or 2 shares here and there every week or every other week. And same thing with LRCX there, 1 or 2 shares here or there. But other ones I see a lot of value in right now. If they stay pulled back, I'll probably focus on some of these in February. Pfizer, Kraft Heinz, General Mills, CVS, huge pullback on this one. If you haven't looked at CVS, I would look at CVS right now. I am down about 30% on this one. It looks very attractive, but I have a big position in it right now, so it's hard for me to add there. Realty Income recently pulled back again with the news that they're not going to cut rates as fast, so the real estate REIT sector might be a sector to look at right now while there's some negative news. Haverty's Furniture, consumer staples seems to be really or consumer discretionary, seems to be really pulled back. Some consumer staples like Kraft Heinz as well. Chevron, another energy company, pulled back. Valet in the material sector, big pullbacks in the material sector right now. Genuine Parts Company, big pullbacks in industrials right now. Johnson & Johnson, big pullbacks in healthcare right now. Wouldn't mind adding a few more shares there. Comcast is below my cost basis again. American Waterworks, very close to my cost basis. I added some shares to this one last week. Nutrien I've been adding to over the last several weeks. Any of these companies, as well as many, many others right now, are very close to their 52-week lows or just bouncing off them right now. So good time to be looking at the market, finding value where you can. Again, some of the sectors overall I'm seeing some value are the industrial sector. Healthcare sector seems to really have pulled back. Consumer discretionary, some into the consumer staples as well. Energy, some of the energy companies, really everything except for technology seems to be pulling back right now. So again, might be a good time to look at the market, find those opportunities out there, and be investing consistently. That is my plan. Hopefully it's your plan as well. Let me know what your plan is for 2024 in the comment section down below. And that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you'd like me to cover a stock that you're interested in on the Stock Pick of the Day series, which I do Monday through Thursday whenever the market's open typically, drop it down below. I'll try to work it into the rotation. And again, don't forget to hit that notification bell so you can tune into that video as well. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a very happy new year. Best wishes to you and yours as we enter 2025. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journalistic, educational, and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.